June 2026. SpaceX goes public at nearly $2 trillion, the largest IPO in history. Elon Musk's net worth crosses $1 trillion, a threshold no human has ever reached. But in 2008, this company was weeks from death. 3 rockets had exploded. The money was nearly gone. How a startup on the edge of collapse built an empire spanning rockets, broadband, and AI. That story starts with a single launch. In March 2002, Elon Musk incorporated space exploration technologies in Hawthorne, California. He had $100 million in cash from the sale of PayPal and a declaration that sounded like madness to the established military-industrial complex. He wanted to make life multiplanetary. The reality on the ground was far more modest than the rhetoric. A skeletal crew of just 30 engineers set up operations in a retrofitted machine shop. This was not a mature aerospace firm with deep institutional backing. It was a raw, chaotic startup operating on a razor-thin budget. Their immediate goal was to prove they could reach orbit with a single-engine, liquid-propellant rocket called Falcon 1. But space is unforgiving. The first test flight on March 24, 2006, ended just 2 minutes after liftoff, when a first-stage engine leak caused a structural fire. The rocket plummeted into the Pacific. 1 year later, on March 21, 2007, the second launch made it higher, but a fuel line rupture forced a premature engine shutdown, leaving the vehicle unable to achieve orbit. Then came August 3, 2008. The third rocket suffered a catastrophic timing error during stage separation. The booster collided with the upper stage, destroying the payload. The company was out of money and out of options. As the global financial system began to freeze in late 2008, outside capital evaporated. With less than $10 million remaining in the bank, SpaceX could not fund another launch, let alone sustain payroll. Musk was forced to liquidate his remaining personal assets and borrow money just to keep the lights on, risking everything on a fourth attempt. On September 28, 2008, Falcon 1 Flight 4 stood on the launch pad. This was the final shot. The engine ignited, and the rocket cleared the tower. 9 minutes and 30 seconds later, the upper stage shut down. Falcon 1 was in orbit. It became the first privately developed, liquid propellant rocket to achieve orbit in history. The technical proof was absolute, but the business of space required a different kind of execution. While Musk bore the initial financial risk, Gwynne Shotwell stepped in to turn this raw milestone into institutional trust. As the business operator, she focused on selling reliability, translating engineering achievements into customer contracts. The success immediately unlocked market credibility. Within months, NASA validated the young company as a primary supplier, awarding SpaceX a $1.6 billion commercial orbital transportation services contract to resupply the International Space Station. This partnership served as the first large-scale validation of SpaceX as a supplier. It provided a steady, non-dilutive stream of capital that pulled SpaceX out of its survival crisis. The company was no longer an expensive, high-risk experiment. It was a legitimate aerospace contractor. Musk now shifted from a pure risk-bearer to a founder with concrete evidence behind him, giving SpaceX the financial foundation to scale. On December 21, 2015, a Falcon 9 booster descended through the Florida sky and touched down at Cape Canaveral. This was the first successful landing of an orbital-class rocket. 4 months later, on April 8, 2016, SpaceX recovered a booster on an autonomous drone ship at sea. This recovery marked a step change in how launches could be done. Then, on March 30, 2017, the model proved viable. A previously flown booster launched the SES-10 satellite and landed a second time. These achievements immediately reshaped the economics of space. The first stage represents 70% of the total cost of a Falcon 9. Chief propulsion engineer Tom Mueller designed the Merlin engines to survive 10 consecutive flights. Head of flight reliability, Hans Koenigsmann built the avionics and grid-fin guidance systems that made vertical landings routine. In 2018, SpaceX introduced the Falcon 9 Block 5. This version was engineered to fly 10 times with only basic inspections, and up to 100 times with moderate overhauls, forming the foundation of an expanding launch architecture that soon included Falcon Heavy. This repeatability systematically dismantled the pricing structure of the global launch industry. While legacy competitors built entirely new rockets for every single mission, SpaceX reduced its marginal launch cost to between $15 and $17 million. By recovering and recycling the most expensive hardware, the company turned launch capability into a massive economic moat, making expendable rockets obsolete and cementing a vertical integration strategy that no competitor could match. Space used this vertical integration to build its own customer base in orbit. Between 2019 and 2025, the company launched more than 4,300 Starlink satellites across roughly 130 dedicated Falcon 9 missions. This rapid deployment changed the financial nature of the business, shifting SpaceX from a pure launch provider into a global telecommunications infrastructure giant. By the end of 2025, Starlink reported 1.8 million paying customers worldwide. The system generated $4.5 billion in annual recurring revenue, providing a highly predictable stream of cash to fund capital-intensive development elsewhere. The constellation quickly attracted national security interest. In 2022, the Department of Defense signed a $1.1 billion contract for Starshield, a military-grade satellite program designed to supply secure, low-latency communications to tactical forces. But this rapid expansion triggered intense friction on Earth. SpaceX secured 3 gigahertz of Ka-band spectrum to run the network, sparking immediate pushback. Competitors like OneWeb and Amazon's Project Kuiper filed formal complaints, alleging anti-competitive dominance of orbital shells and valuable frequencies. The International Telecommunication Union opened reviews following objections from the European Union and Japan over perceived spectrum hoarding, while independent think tanks warned that control over launch, broadband, and data infrastructure created a de facto monopoly. The network that funded SpaceX's next-generation ambitions also created a complex concentration of power, turning orbital real estate into a high-stakes regulatory battleground. Private funding rounds reshaped the capital structure of SpaceX long before it reached Wall Street. A $30 billion valuation in 2019 rose to $80 billion in 2022, before surging past $1 trillion in 2025. This rapid appreciation set up a highly calculated path to the public markets. On May 15, 2026, SpaceX filed its S-1 prospectus with the SEC. 1 month later, on June 12th, the company priced the largest initial public offering in history. The share price was $135. The public valuation was $1.8 trillion. The offering raised $75 billion in raw capital, converting years of orbital dominance into liquid market power. The listing immediately rewrote the global wealth index. With his personal equity stake finalized at the IPO price, Elon Musk's net worth crossed $1 trillion, establishing the first trillion-dollar individual in financial history. This capital base anchors a larger industrial network. SpaceX is positioning itself at the intersection of satellite connectivity and artificial intelligence through planned alliances with xAI. Internal blueprints outline orbital data centers, modular supercomputing racks hosted on Starship-derived platforms, powered by solar arrays in high orbit. Meanwhile, Starship remains the core of the long-term architecture, supported by NASA's lunar lander contracts and Mars exploration pathways. Yet, this expanding footprint raises difficult policy questions. Regulators and sovereign states now face a single private actor controlling global launch capability, orbital broadband, and advanced intelligence. We have entered an era where one corporation controls the gateway to the cosmos. The ultimate leverage isn't wealth, it's infrastructure. When one empire owns the stars, they dictate the future. Subscribe for more business empire case studies and comment on which we should cover next.